Good morning and happy new year. Back for at least a day before I have to lead off to another meeting. But hey, it is what it is. Before we get started this year, let me just remind you before Dave joins us here that the year has started. We are in 2023, and if you plan on retiring, especially in the next 2 to 5 years, it's vitally important that you make sure that you know how much risk you have in your current portfolio. Give us a call, 863-382-0037 to schedule your core retirement design. Hey, with that, we've got Dave coming up next.
Time to check in on money this morning up in Wall Street. What are they doing to you today? I'll do a little spoiler. So far, they're getting kind of nice to you for the first trading day of the year. Let's check in with Phillip Statler from Statler Financial Services, who is here to quantify exactly what went wrong last year and what's likely for this year ahead. Phillip, good morning. How are you?
Hey, good morning, Dave, and happy new year as we get to the first trading day of
It's about time.
2023. Imagine that.
Yep, it's funny. Back 400 years ago, they used to figure when you needed to let blood, they used leeches. In 2022, I guess it was just, hey, put some money in the stock market. You'll get a bloodletting, won't you?
Yeah, definitely seems to be that way. At least looking at, some of the returns for the year, definitely that direction for sure. It was a lot.
I was doing an approximation yesterday, kind of on the fly while I was soloing, and I was probably the poster child of the whole bunch. And we're looking at the NASDAQ exchange full year return in 2022. If you thought you were being really adventurous by investing all your money in NASDAQ, you had a really crummy year. You lost about 30% from January 1st to December 31st, right?
Yeah, actually, you're down 33.1% in the NASDAQ. And the NASDAQ, Dave, the first time since 2020, not 2020, since 2000, that's a long time ago, right? Mm-hmm. This is the first time we've had 4 negative quarters for the NASDAQ.
Lordy, Lord. And we've been saying it all along because those tend toward being the growth stocks. They're more debt sensitive. So all anybody at the Federal Reserve needs to do is, instead of saying gesundheit, saying interest rate increase to a sneeze, and NASDAQ goes crazy. And we just kind of proved that principle this year in spades, didn't we?
Yeah, we really did. One of those things where, it's a terrible year for the NASDAQ. And the question is it over? How much more do we have to go? Do we have any to go? We still have a lot of naysayers out there that think, 2023 is just not going to be a good year because of inflation. You got the FOMC meeting minutes coming out this week. And that may give us some indication, Dave, what we've got to look forward to in 2023.
Yeah, this may very well be one of those, Fed minute weeks in which it could actually be a positive, because with that back off to a half a point, which everybody said was too much anyway last month, if they get the feeling from the minutes that even the hawks that were on the Federal Reserve Open Market Committee last year, if they even see that, well, maybe we've done enough for a little while, that might be a real good positive market mover on Wednesday afternoon. I think it's Wednesday, isn't it?
It is Wednesday. Yeah. Which is tomorrow, right? It's tomorrow.
Geez, right? That's right. It's only a 4-day work week for a lot of folks. It was not a fun time whatsoever. The indication of how bad the stock markets were last year, I found a think piece over the weekend on one of my tip sheets that was headed up, the new hot investment product, savings accounts. When you look at 4% 2-year federal bonds, a decent length CD could actually be a halfway attractive investment these days if your long-term view is that things are going to be flat for a while.
Well, that's true, Dave, because I just pulled up the S&P U.S. Aggregate Bond Index, okay, which is supposed to be safe, right? I mean, bonds are supposed to be a relatively safe investment, right?
Mm-hmm.
So down 12% last year.
Yep. Yeah, that old you have always kind of poo-pooed the old rule of the 60-40 portfolio. Last year was one of those examples of where if you were 60-40 bond stocks, depending upon how close you are to retirement, which is the 60 and which is the 40, that old rule of thumb just don't work no more because last year everybody took a bath on the investment markets, didn't they?
They did, they really did. The S&P 500, the stock indexes, as well as the bond index, all took a decline last year. So, and if they continue to raise interest rates, that number can continue to go down.
Absolutely, and the interest rates, they affect so much more than we give them credit for. Like we talk about Nasdaq all the time, but looking at the bond rates and whatnot, that was kind of I saw it almost as a lighter side. But after all those years of my father-in-law having put too much money in CDs, complaining about 0.25% interest rates, now all of a sudden savings accounts at the very least are almost looking attractive compared to equity investments. They actually are on the short-term basis. The good news that comes out of that is law of averages. The S&P had its worst year since the financial crisis back in '08. We were talking about how NASDAQ was down by a full third. Statistically only, the odds are in favor of this being at least a decent year because, according to J.P. Morgan anyway, the major indexes have been positive in 32 out of 43 years, and the S&P and the Dow have never, in their records anyway, had 2 consecutive down years. So this might be a time to think, okay, I got a few extra bucks. Maybe early in January might not be a bad time to make a shift.
One of the things I learned early on, Dave, is you never say never, right? Never say never.
Mm-hmm.
And maybe it won't happen, but and statistically it won't happen. But again, to say it's never happened doesn't mean it won't happen. And so we've got a lot of headwinds coming into 2023.
Yeah, you did hear me talk. The odds, I didn't. Frankly, if I had some spare money, I'd wait until the recession that we're all almost certain is going to happen somewhere and put the money in right at the bottom, because that'd probably be the best investment at the moment if I had free cash, wouldn't it?
Yeah, it would if you knew when that was going to be, right? Because the other thing we have to remember is the stock market is a precursor. So it's looking 6 months down the road to what's going to happen. And it's reflecting that. So trying to figure out when that's really going to hit the bottom, that's a tough call.
That's absolutely true. This week is going to be eventful. I mean, we referred to the Open Market Committee meetings minutes tomorrow afternoon, but this also, given it's the first week of the year and the first week of the month, we're going to get our usual deluge of employment news, which also could, at the end of the week, when we get those full federal numbers, be one of those good news, bad news situations. If the employment market during December looks unexpectedly hot, we're going to have one of those good news, bad news responses on equity markets. They're going to end up tanking, figuring that means we're looking at more interest rate increases. If we're cooling off a little bit and we have a disappointing Christmas season from an employment standpoint, that's going to be one of those times where it could be good news, meaning the inflation control measures are having some effect on the employment market. It's got a potential to be a weird week ahead of us, doesn't it?
It does, starting off with actually this morning, at 10 o'clock, we get a construction spending number. And I think that one, that's an important number there. And then you're right. We've got, Wednesday, you've got the FOMC meetings. You also have the job openings number coming out. Thursday is, the normal jobless numbers, but we also have the ADP employment report coming out on.
Is that due tomorrow
Thursday.
morning or Thursday? Thursday they're doing it this time?
Yeah, okay. Thursday morning at 8:15 is when it's supposed to come out. And then Friday, you're right. Friday is basically jobs day from all over the place, right? It's non-farm payrolls. It's the unemployment rate. It's the average hourly earnings. But we also have factory orders coming in Friday about 10 o'clock. That one's going to be a big number.
And all of that stuff, like the construction spending and the factory orders numbers, when things are normal, those are numbers that you just maybe see a 10-point tick in the Dow based on them. But we're so touchy right now that anything that's a surprise to the pleasant or the unpleasant side can be quite a market mover in these days.
That's right. It really is. And then next week, man, oh boy, CPI comes out next week.
Now that won't be first reading on fourth quarter already.
No. CPI, Consumer Price Index. Sorry.
Oh, I'm sorry. Yeah,
Not GDP.
Consumer. No, GDP. I was going to say that's going to take at least 3 or 4 weeks to come up with.
Okay,
so
yeah, that won't come to the end of the month. So yeah,
that's kind of what I was thinking. Yeah, the inflation rate will always mess with people's brains. I haven't checked the Federal Reserve meeting schedule for this year yet. Do they have one in January, or are they skipping until February?
I don't know. I don't have that in front of me either.
I see. I'm going to do a search while you talk.
Hey, the other thing we talk about all the time, Dave, is interest rates, right? So interest rates moving up some. We got the 2-year trading right now 4.38% compared to the 30-year at 3.86%. So we're still about a half a point there upside down when it comes to rates. And the 10-year is still at like 3 3/4. So interest rates still short term are migrating upwards. And so that's, it's going to be interesting to see when that finally gets under control. I have one big headline, Dave. Crude oil, big question mark. Could it hit 100 in 2023?
Don't say it. That gave me enough time to double check. The next Federal Reserve Open Market Committee is February 1st. So it's kind of sort of half January, half February. They got 8 meetings during 2023 planned. So we won't have any more scares until the 1st of February as far as what they do with interest rates.
Yeah, unless, that the minutes could come out and give us maybe some indication, but you're right, until they actually get back together. And it will be a new board in February, right? February 1st will be a new board of presidents. And so we'll see what they have to say.
And that's something we've alluded to now for about the last 3 meetings. There has been a change in membership, and the conventional wisdom has kind of a shift toward a more dovish stance as far as the history of the governors that are going on the voting positions, in contrast to the ones that are going off, which gives Wall Street a little bit of optimism that maybe, just maybe, they're going to give us a chance to let all the interest rate increases from 2022 bake in before we start going crazy again.
And that would be a nice change of pace, for sure, because let's face it, interest rates have ticked up significantly in 2022. And it would be nice for a little relief in 2023, at least starting out, to see what those interest rates are finally going to do to us and how much they've slowed down the economy. I got to think that it slowed it down significantly in 2022.
Absolutely. Setting the table for the morning to see what we're doing today. Friday was a minor off day on Wall Street. I mean, it's weird when a 73-point drop in the Dow is considered minor, but relative to what we've seen over this past year, that's almost hold steady. The Dow was down by about 0.22%. NASDAQ was down by a little under 10 on Friday, or the S&P was down a little under 10 on Friday, and NASDAQ was down by 11.5. It was a relatively quiet day at the end of the year. What are we looking at this morning, 45 minutes early? Any good news to add?
Hey, I got some green ink this morning starting off the 2023. Now, if we can close that way, it would be great as well. We got the S&P 500 up almost 0.6%. That's about $22. The Dow is up 0.4. That's $135. And the NASDAQ 100 is up almost 0.9%, about $97. And the big winner this morning, actually right now, Dave, is the Russell 2000, up 1.1% or almost $20. So good news there. We've got some good news on the other front as well. Silver up 2.25%, Dave, back up over 24 to $24.58 an ounce. And gold's up a little over 1%, almost 1.1%, $1,845. And crude oil is heading down this morning 1.3% to $79.16 a barrel right now.
Well, I'm glad to have that because I was over 80 for a couple, 3 days in there and didn't enjoy it one tiny little bit. So I'm glad to have it happen. This is, we talk about all the ups and downs, and yeah, the odds are in favor of an increase in the equities market this year. But then again, Gambling is really done best in casinos instead of with your retirement plans. How do I get a hold of you to be able to get the risk out of mine?
Dave, that's exactly the reason that we developed the core retirement design to help people design the retirement they always dreamed of. Give us a call, 863-382-0037 to schedule your core retirement analysis, where we'll look to see how much risk you got and if you're on the right track for that retirement. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
All righty, and we will be back here tomorrow morning to update everybody as to what happened today and what's likely to affect your money in the week ahead. Phillip, thank you so much. Again, a very happy new year to you. Appreciate you joining me.
All right, buddy. Have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us. And again, I want to tell you, Happy New Year. It is, today's Tuesday. It's January 3rd. I do have some meetings to attend the rest of this week, so I'll be out until Monday the 9th. But looking forward to it, because once I'm back, then I'm in the seat for quite a while. So with that being said, have a happy new year, and may 2023 be a blessed year for you as we continue on this journey towards retirement. Again, join us again on Monday. So long.